Welcome to the video on budget analysis for local self-government. In the previous videos on government budget analysis for national accounts, an overview about the general government sector was given. We have also discussed about the institutional sectors of the economy with a specific focus on general government sector, Indian budget accounting system, economic and purpose classification, and various accounts compiled for general government sector. For local bodies, the concept for account compilation is same as already explained in the previous videos. However, here the data collection method is different, which we will cover in detail in this video. In this video, we are going to look at what do we mean by local self-government, here referred as local bodies, and functions of local government, funds available with the local bodies budget analysis by NSO, data sources for the same, schedule for data collection, and accounts compiled for local bodies. The general government sector comprises of all units of central government, state government, local government, and all non-market NPIs which are controlled by government. In the previous videos, we have covered the budget compilation process for center and states. Here we will understand the same in respect of local bodies. As per SNA, local government units are institutional units whose fiscal, legislative, and executive authority extends over the smallest geographical areas distinguished for administrative and political purposes. They may or may not be entitled to levy taxes on institutional units resident in their areas. They are often heavily dependent on grants or transfers from higher levels of government, and they may also act as agents of central or regional government to some extent. Before starting the discussion, we should understand that why it is important to do the budget analysis of local bodies. An answer for the same lies in the vast number of local bodies of India and their role in providing a wide range of services to local residents. Local bodies are part of the general government and hence covered in the public sector, so the process would be helpful to know local bodies' contribution in general government sector as well as in total economy. Local bodies in India are at two levels, rural and urban, and follows a two-tier or three-tier system. As per 73rd Constitutional Amendment, rural local self-governance follows three-tier system, which includes Gram Panchayat at village level, Panchayat Samiti or Taluk Panchayat at block level, and Jila Parishad or Jila Panchayat at district level. Generally, these are referred as Panchayati Raj institutions. Similarly, as per the 74th Constitutional Amendment, three tiers of urban local self-governance are Nagar Panchayat, Municipal Council, and Municipal Corporations. As far as the functions of local bodies are concerned, the local bodies are entrusted with the implementation of schemes for economic development and social justice, including the matters listed in the 11th and 12th schedule of Constitution. At present, 29 subjects in the 11th schedule and 18 subjects in 12th schedule are identified, like agriculture, animal husbandry, fisheries, water supply, sanitation and family welfare, etc. For fulfillment of the task assigned to local bodies, most of the funding comes in the form of grants from center as well as states. Apart from these grants, local bodies are also authorized by state legislature to levy taxes, duties, fees, and raise their own resources as per Article 243H and 243X of the Constitution. So the main sources of funds for local bodies may be categorized as local body grants as recommended by the Central Finance Commission, funds for implementation of centrally sponsored schemes, funds released by the state governments on the recommendation of the State Finance Commissions, own resources, borrowing and loans. Other income for local bodies includes donation, property income, and sales of goods and services. For strengthening of local bodies and their accounts, 10th Finance Commission onwards several recommendations were made. In this process, 13th Finance Commission recommended the preparation of local body accounts by collecting data on receipts and payments. Attempts were also made by Ministry of Panchayati Raj for strengthening of local bodies and their accounts, which includes three-tier classification for local bodies and Panchayati Raj institution accounting software. As we know, six-tier budget head system is being followed in India for reporting different transactions in detailed demand for grants. The details about this Indian accounting system are covered in the video on government budget analysis for national accounts. This six-tier system of accounting is difficult to implement at lower level, so these formats were simplified by CAG. The new simplified system comprises of three-tier classification of reporting as major head, minor head, and object head, representing function, schemes, and object of transactions respectively. Ministry of Panchayati Raj was also assigned the task to develop software called Panchayati Raj Institution Accounting Software to implement these simplified accounting procedures and generate all reports in the formats prescribed by Subcommittee on Budget and Accounting Standard for Panchayati Raj institutions. This is the format of simplified accounting system for local bodies developed by CAG. As you can see, the simplified accounting system comprises of major head, minor head, and object head. This is a part of local bodies non-tax receipt accounting system. Here under major head 0202 of education, sports, arts and culture, and minor head 101 of pre-primary, primary and secondary education. Object code assigned for fees and fines are 41 and 42 respectively. Similar approach follows for various types of transactions for local bodies which are recorded under appropriate major head along with minor head and object head. As per the recommendations of 13th Finance Commission, NAD has evolved a methodology for collecting necessary information from local bodies. In this process, NSO has devised a simple schedule to collect all the data of receipts and payments, both current and capital. The schedule has been designed keeping in view the activities of local bodies as listed in the Article 243G and 243W of the Constitution. Sources for data collection are annual budget documents for urban local bodies, an annual receipt and expenditure or annual account for rural local bodies. Coming to the third point, the role of the states in this process. So to compile the accounts of local bodies, states are required to prepare a list of local bodies up to Gram Panchayat level. This schedule has been distributed to all the DES to collect the required information, and training was provided to the states for the same. For the purpose of collecting financial information, the local bodies are further categorized into administration and departmental enterprises. The criteria to distinguish the administrative department and departmental enterprises of local bodies is same as explained in the previous videos. For administration part, the financial information has to be collected in 4 sections: current receipts, capital receipts, current expenditure and capital expenditure, while the information for departmental enterprises have to be collected in 2 sections only: current and capital expenditure. Now we will look at the schedule designed by NSO for local body data collection. The schedule has 5 blocks, block 0 to block 4. Block 0 is designed to capture the information related to the identification particulars of a local body like name of the state, name of the district, name of local body, whether rural or urban, code of local body, total population covered, accounting year, name of informant, name of investigator, etc. It also explains the phasing and grouping system of survey. For data collection process, all rural local bodies in each taluk or block or mandal are covered in 3 phases, 30% in phase 1 and 30% in phase 2 and remaining in third phase. The urban local bodies are covered on census basis each year. Panchayats selected in each phase are divided into 2 groups. Information for these 2 groups of panchayats should be collected by separate investigators. Information in respect of local bodies is to be collected for at least 3 years in each phase. Block 1 is designed to record the information related to receipts of a local body. It has 2 parts, one for revenue receipts and one for capital receipts. The items included in the revenue receipt part are taxes, receipts from sale of goods and services, property income and grants from center, state or other local bodies. Receipt from sale of old furniture and fixtures, money received against services rendered like education, health protection. Receipt from sale of drinking water, etc. are covered under sale of goods and services. Items under capital receipt part of block 1 includes capital grants from center or state like grant from center for MG Narega scheme, receipts from sale of land or financial assets, etc. Block 2 captures the information related to expenditure of a local body. Same as block 1, it also has 2 parts, part 1 for revenue expenditure and part 2 for capital expenditure. Items covered under revenue expenditure include salary, wages, benefits, pensions, purchase of goods and services, expenditure on maintenance, current transfers and interest paid. Purchase of goods and services covers the expenditure made against fuel charges, stationery items, rent paid on hired buildings, etc. Expenditure on maintenance includes maintenance of buildings, roads, machinery, etc. Current transfers include scholarships, etc. The items under capital expenditure part of block 2 includes purchase of financial assets, purchase of lands, purchase of second-hand assets, capital expenditure on assets, capital transfers, and change in stock. Capital expenditure on assets includes construction of buildings, roads and bridges, purchase of transport equipment like purchase of car, jeep, and major expenditure incurred in maintaining the already existing vehicles are also included under capital expenditure on assets. Expenditure incurred on machinery equipment like air conditioners, Xerox machine, etc. and expenditure incurred on their maintenance, animal stocks are also included under capital expenditure on assets. Change in stock is the difference between closing and opening stock of raw materials like cement, iron and steel, etc. during a period of account. Block 3 captures the information related to expenditure by local body DCUs. It also has 2 parts, part 1 for revenue expenditure and part 2 for capital expenditure. The information is collected for 5 industries which are agriculture, transport, electricity, forestry and manufacturing. Variables in this block are same as block 2 except commercial receipt, which includes all commercial receipts of DCUs like sale of water for irrigation, sale of timber, sale of milk, sale of electricity, receipts from transport, etc. Block 4 gives the details of the funds available with the local bodies from loans received from center, state or from other institutes, deposits and advances, which includes advances given to staff, deposits taken from contractors, etc. and opening balance and closing balance. Data obtained by canvassing the schedule is processed for preparing the 3 accounts, which are income outlay account of administrative departments, which deals with the current revenue and expenditure of administrative departments, estimates of net product, This account is prepared for both administrative department as well as departmental enterprises. Net product of administrative department comprises of compensation of employees, pensions and other benefits, and net product of departmental enterprises is sum of compensation of employees, rent, interest and profit of departmental enterprises. Third account is capital formation, which is prepared for both administrative department and departmental enterprises. This account gives the information about the gross addition to the fixed assets and increase in stock of inventories during a period of account. All these three accounts are helpful for analyzing and estimating the contribution of local bodies in general government sector as well as in the total economy. As explained in the previous slides, data collected will be converted into the main accounts as per the national accounts methodology. So now we will discuss how to compile the estimates of net product of administrative department from the local body schedule. Here, as you can see, we are compiling the information for total of local bodies, construction, water supply, education, medical, sanitation and public admin. For this account, we are using the data from block 2 of schedule, which record the information of expenditure, both current and capital. Subblock 1 of block 2 records information of current expenditure, whereas subblock 2 records information of capital expenditure. First, we will understand the account generation process for total local bodies. For total, the value which is being used here is of item 1, which is the salary variable under current expenditure or subblock 1. We also include the capitalized wages here, which are taken from subblock 2. Similarly, item 4 of subblock 1 is pension, which is recorded in pension column, and item 2 and 3 of subblock 1 captures the information on wages and benefits, which is recorded against others or column 4 here. Here other stands for other benefits. Sum of salary, pension and wages gives the total NVA for local bodies. Only the capitalized wages paid to the government employees is to be included here. If the expenditure is towards payment of wages to households, or we can say other than the government employees, then we should not include those wages under salary variable of this account. They should then be included in the capital formation. For construction, we use the same variables as explained for total. The difference is only that now we will take these values for only construction industry. Earlier we are taking the total of all industries. Same approach follows for water supply, sanitation, medical and education. NVA of public admin is obtained using the residual approach, which means we subtract the total of all the above 5 industries from the total NVA, which gives us the NVA for public admin and defense. Similarly, by using the appropriate item values from the relevant blocks of the schedule, other accounts can be compiled. After compiling the requisite accounts at panchayat level, block level estimates will be calculated by compiling all the panchayat level estimates at block level and multiplying with appropriate multiplier, and this block level estimates will be summed up further to have any level of aggregation as district, state or country. The estimates so arrived will be reflected in the regular macroeconomic aggregates of general government sector published by NSO in the National Account Statistics. Thank you.